YouTube, what's up everyone? Welcome back to the show. You are not ready for this. Look, while crypto Twitter is out here crying bear market, the big boys, they're moving in silence. They're scooping up hundreds of millions of dollars worth of crypto. Don't believe me? I got the facts. I got the truth. I'm going to show it to you on the screen. You always ask for the data, and I bring nothing but the data. Something huge just happened with ETFs that everyone's overlooking that could open the floodgates for XRP, Solana, even Stellar to get that Wall Street money pouring on in. Folks, this isn't hype. This isn't hopium. This is happening right now. And today, I'm breaking down the hidden accumulation moves that no one is talking about. Why Bitcoin felt off since July. The ETF approval that just changed the game, and the one chart that tells us Bitcoin peak isn't coming in 2025, but it looks like it's coming in early 2026. Stick with me because by the end of this video, you're going to see the market in a way that most people can't. You can see right here on the screen, a thing of beauty. You know what this is? This is South Korea. This is up it. Who remembers 2017 when South Korea kicked off the XRP bull run? And then all of a sudden, CoinMarketCap removed the pairing for the XRP to South Korean won, and it looked like the price of XRP started to crash. Well, we know that wasn't the case. The price wasn't crashing. It was just called manipulation, what we're used to with them doing on XRP. But here you go again. Up it, $330 million in XRP volume coming in. Ethereum, 258, Bitcoin 137. The money is flowing into XRP just like we thought it would. Now, we got a couple of spots left for this week. If you didn't book that one-on-one call, I don't know what you're doing. The link is down below. We go through your portfolio. We rip it apart. We get exit plans. You need to know what you're doing and when you're going to execute, because when it hits, and trust me, it's going to hit, you're going to be caught with your pants down. You don't want that to happen. Be smart, folks. An investment in yourself is the best investment that you can make. And we're going to jump over to this one. Crypto Twitter is out there just screaming and crying. Nothing but bear market vibes. Has everyone realized that Twitter, the algorithm, is pushing out a ton of negative information, a lot of FUD, a lot of bearish sentiment? Why? Ask yourself why, right? It feels like a freaking apocalypse on Twitter right now. We're in a bear market. Bitcoin's dead. Blah-de-la-de. If Bitcoin was dead and we're in a bear market, why did some major institution just purchase $171 million in Bitcoin? Why? Are we in a bear market, folks? Why are they buying Bitcoin? Ask yourself, does someone with this kind of capital care about an $1,000 swing in price? No. They're buying because they know what's coming. And this is the disconnect. Because retail panics, institutions accumulate. Every cycle, it's the same movie. Just the numbers get bigger and bigger and bigger. This isn't just a buy. This is a signal. A reminder that the smart money, it doesn't wait for the perfect bottom. They accumulate when settlement is trash. Sentiment right now, it's trash. Look at this. Look at this. This is massive. This is what you call accumulation. This is what you call bull market vibes. But Twitter doesn't want you to think about this, folks. They accumulate when sentiment is trash because that's when they get the best entries. And trust me, this is not the last headline like this. We're going to be seeing this every single month moving forward. And now look, if you're not part of the Instagram page, we just launched it. 10 followers, I know. But it's up, it's live. Come follow me over on Instagram. We're posting exclusive content like never seen before, behind the scenes. You'll even get to see pictures of my setup. You'll see what goes on behind here. Plus, we put out amazing crypto content, what doesn't make the YouTube cut. So get on over there. Now, I pulled up ChatGPT and I was like, look, man, you're the best AI I know. You're my friend, ChatGPT. Can you tell me why people are bearish? And it says, look, Bitcoin has been chopping sideways or bleeding slowly since mid-July. So what happens? Traders get impatient when they don't see new highs. So they interpret that as a flat or as a down. You add in failed breakouts and repeated rejections at resistant levels, and it feels bearish, even if the bigger structure hasn't broken. Then they talk about rate cuts. It says we haven't got rate cuts, but we know we got a little bit of a rate cut. But the bigger picture here is we didn't get enough rate cuts, right? Liquidity isn't flowing back into crypto just yet. The stocks market, like the Russell 2000, they haven't confirmed a broad on risk breakout as well. We have institutional exhaustion you're looking at. It says after the initial hype of ETF approval and filings, the market didn't moon overnight. Headlines about BlackRock, hashtag Ripple aren't translating to instant pumps. People assume no pump is bad news when rarely it just means that the flows take time. Everyone wants $1 trillion in crypto overnight. It doesn't work like that. It doesn't work. I wish it did. Trust me. I wish it did. And now you see the algo pushing out that we're in a bear market. You see bigger accounts pushing this as well. We're in a bear market. We're not in a freaking bear market. We're not even close to a bear market. Now I want you to listen to Raoul Pal here. Okay. He states, why has Bitcoin felt off since mid-July? He says it's not the OG selling. He says there's also a macro-driven dynamic at play here. All right. So we're seeing choppy, it's heavy out there, almost like something actually went down. And a lot of people are starting to blame the whales. The whales are taking profits. And yeah, look, that's part of it. And people take profits and they're allowed to take profits. Everyone should take profits. But the real driver here, and we're going to listen to what he has to say, is macro. I mean, we're talking bonds, right? Bond yields. We're talking the dollar strength, and we're talking about liquidity tightening. When rates are high, your speculative assets like Bitcoin and crypto as a whole, they struggle to catch a bid, right? Institutions head, retail, they hesitate, and the market feels sluggish. Listen to what Raoul has to say here, and we're going to touch on this a little bit deeper.
Okay, so the global M2 chart, the famous chart that every fucker copied, and I really appreciate you guys. You guys are absolutely brilliant because you go online and call anybody out who uses this chart without referencing Julian and I. I really do appreciate that, but this is our work. And again, nobody really understands it because they're so superficial in how they look at things. We've always said things will deviate, things will change. Here's the 12-week lead. Since July 16th, 20.
And now let me set this up. This is the M2 money supply. Remember, everyone always compares Bitcoin to it, and there is about a 3-month delay. So M2 will go up. People want to know, why hasn't Bitcoin increased with it yet? Remember, there is a 12-week, aka 3-month delay behind it. But I always preach in this channel, pay attention to the Bitcoin and gold chart. That's the real chart to be paying attention to, not really the Bitcoin M2. Keep listening.
2025, we've seen this weird underperformance. And I was like, it's broken. It's broken. See, you are morons for following this. People start forgetting about it. We don't forget. You see, what has happened in the meantime is the Treasury General Account, that is the Fed, the Treasury, have been issuing bonds to top up their general account, which is taking cash out of the system. So they've withdrawn about 500 billion since July the 16th. That has hit risk assets somewhat. And of all the risk assets, the one that's most susceptible to liquidity is crypto. So crypto got that, which has been this choppy, it went up, alts have been outperforming, then they came back down again, and it's been just a bit sloppy. Nothing more than that. There's been nothing really adverse going on, just a bit sloppy, top of the range for ETH, top of the range for Sol, tried to break out, came back down, fine. But generally it's because they're sloppy because liquidity has been taken out very fast. The liquidity withdrawal stops about here. We're at the point where we don't need to withdraw any more liquidity and the Treasury General Account is topped up. Okay, so that negative thing has gone probably today, tomorrow, this week, next week, whatever. It's gone. And we start to see that liquidity will play catch up. Does it catch up to this chart? I don't know, but it always has done in the past.
So liquidity is going to play catch up. It's always caught up to that chart in the past. Remember that. But here's the alpha, right? This isn't permanent. Cycles always flip when policies shift. Rates, they can't stay elevated forever without something big breaking. And when that pivot comes, when liquidity starts to flow back in, and it's going to flow back in, Bitcoin's not going to creep higher. It's going to rip. And then the rest of crypto is going to rip. Mid-July's chop is just the pressure cooker that is building up. And then we get this over from Nate. This is huge. Hashtag NASDAQ Crypto Index US ETF approved under the SEC's new generic listing standards. If you've been under a rock, you probably missed this news, but the SEC no longer is going to take 240 something days. They will have ETFs approved within 74 days. And if there's baskets that these assets are already in, they will be approved immediately. So for the first time ever, US investors can own a spot ETF that just isn't Bitcoin or Ethereum. You see it pulled up here on your screen. We're talking about now exposure to XRP, to Solana, to Stellar, and even more cryptos on top of it. That's trillions in combined market cap suddenly made investable through a single Wall Street product. Let's come over to this next screen here. You can see that hashtag holdings, Bitcoin, ETH, XRP, Solana, and Stellar. Now think about what this means for a second. Pensions, retirement accounts, financial advisors, people who never touch a cold wallet now get diversified crypto exposure all with one ticker. This isn't just about inflows. This is about validation. Every time a product like this gets approved, it makes crypto look less like a gamble and more like a standard asset class. Bitcoin, Ethereum, look, we've said it before, that opened the doors. This ETF is going to blow it wide open, folks. So as we got the negative Nancy's out there on crypto Twitter telling you and trying to put it into your head that this bear market, or that we're in a bear market, the bull market has come to an end, not even close. These ETFs that are about to come are going to blow the lid off of crypto. Let's zoom out here now, right? Twitter is crying about the bear market. Institutions are buying Bitcoin by the hundreds of millions of dollars. Retail complains about chop. Macro forces are setting up the next liquidity wave. While most people think ETFs are just about Bitcoin, ETH, hashtags just opened the freaking door to a diversified crypto index that includes Solana, XRP, and XLM. This 4-year cycle is evolving into a 5-year cycle, with the real peak likely coming in 2026 because we have all these ETFs that are about to get approved within the next 3 to 6 months. So if you're bullish on crypto long term, folks, this is your signal. Zoom out, stay patient, and recognize that the next wave of adoption, it's already in motion. Now I want to hear from you. Do you think this cycle peaks this year? Or do you think we're going to extend into 2026? Drop a comment below. Smash that like button if you found value here, and subscribe, because guess what? We're just getting started.